What's up, traders? I'm excited to go over some swing trades that I've been looking at. It's a really interesting time in the market. We're near all-time highs. There's a lot going on. So I'm excited to see where the market's going to go over the next couple months. Let's get it. But first, I just want to say I hope everyone's enjoying the holidays. I hope everyone had a good Thanksgiving. Normally, I'm in Colorado and it's snowing a bunch, but this year we're visiting some family in Los Angeles. It's been really nice. It's been like 70 degrees every day. I honestly thought it'd be a lot colder, so it's been really cool living out here. And I also wanted to let you guys know that I plan on doing a lot more live trading, live streaming, and market open, and just after that. So look out for that. That way I can help you out. I can go over your questions in real time. And cut me some slack. I'm not the best on camera when I'm live like this, so it's going to be an experience. But look out for that. I love to help you guys out. All right, so let's get into the trades I'm looking at. And right now we can see we are near all-time highs here. So we just made this previous high and we just broke out past that high. And a lot of you might be really nervous to buy. I mean, you see how the market just gone up in a straight line this year. That's really nerve-wracking to be buying up here at the top like this. But honestly, being nervous like that is a huge mistake. The stock market doesn't work based on things being overbought or oversold. And you don't want to make the same mistakes that I did back in 2020 when I just missed basically 2 years of rallying, where you're either too afraid to enter, so you miss years worth of gains, or even worse, you start fighting the market and it comes up, so you try to short it. It goes up higher, you try to short it. And the next thing you know, you're shorting the market for the entire year. And if you really want to know the secret to the stock market, it's that the market is looking into the future about 9 months. So where this price is right now is essentially where we think the economy and the stock market will be in 9 months from now. And when you think about it, in 9 months from now, that would put us out to about the end of the summer of 2025. And at that point, we should be going through a handful of interest rate cuts. And now what we don't know is whether the economy will be doing really well, whether we'll be in a medium-sized recession or a tiny recession or a huge one. We don't know that, but what we do know is that interest rates will probably have been getting cut for about 4 months at that point. And believe it or not, interest rates have a huge bearing on the market. So that's a big deal that interest rates will be cut. That's why the market right here is probably going to continue this trend and keep going up. Now, we don't know whether this trend is going to come down a bunch first or whether it's just going to come down a little bit before going up. Nobody knows for certain. But what I do know is that when you have a breakout like this and when it's going in the direction of the trend, it's usually a good time to buy. All right, so now that we know my overall sentiment for the market, let's go over some trades. And one of the first trades I'm interested in is one of my favorite stores, Costco. Now, that's not why I'm looking at buying it, but this is a really interesting one. Now, the reason why I'm interested in this trade is quite a lot of reasons. First of all, it's been moving really well. We can see that for years, this has gone up. On top of that, we've had this trend line going up. Beautiful, love it. We can also see it had this pennant and it broke out perfectly. That means that it's getting traded really well. It's moving the way it's supposed to move. We got a breakout right here. It broke out through there and moved really well. We got another breakout. It worked there too. So we can see that this is trading properly. There are clearly traders and investors in this that are making the stock move the way it should. Now, this trade that I'm looking at is when it breaks out to all-time highs. I'd be a little hesitant. I would definitely give it a little bit of time to form some kind of pattern or just show how well it's able to stay above this breakout at all-time highs. But this is going to be a really interesting one over the next month. So really what I'm saying is when it breaks out here, it could consolidate a little bit and then take off. That would look really good. Or even better, it could have another pullback, do whatever it needs to do, and then break out. And then that would be a really good buy. It all depends on how well it moves once it gets above this level and gets into these all-time highs. So if it's able to break out of this level and if it looks good where it stays above that level for a few days or consolidates and then breaks out higher, anything like that, that would give us that confirmation, I would be buying and I'll be putting a stop loss down here. And now I'm already in this trade already. I bought this back down here. However, I will be adding to this position. So if I do add to this position, you'll see me adding to this on my Instagram. I'll call it out. I'll let you guys know. Or plan B, if we get a breakout here, it can't hold up and it gets rejected, then we'd want to see how it reacts down here and if we can get a breakout again, because that would be a perfect buying opportunity. It's always a great setup when you see some consolidation and it builds up and then breaks out strongly to the upside. And if you entered this trade plan with the stop loss down here at about $585, that's going to be about a $30 risk from about probably about 615 when it breaks out to 585. It's about $30. With that entry, we would want our profit target to be up right just beneath $700, probably right around 690, because that would give us a 3 times risk to reward. All right, let's go over another trade. And for all you investors out there who like buying the dip, who like buying a bargain, who like something that has a good price to earnings ratio and good earnings, Qualcomm is a really good one. The reason why is back down here, it had earnings, it did really well. Now it's all the way up here. It went up in a straight line. So a lot of investors are into this stock. We can also see that it used to be at all-time highs way up here. That's a really good sign, and it hasn't dropped that far. On top of that, we are now in this beautiful range here. So if we got a breakout of this range right here, we could get a movement all the way back up to the highs. So this is a good trade because there aren't any earnings for about like another couple months on this stock. So that gives you a lot of time to not have to worry about that. We're right here at this very clean breakout level. So that's looking really good. If we do buy a breakout, it would have a small stop loss just like this. So that's looking good. We've got a big risk to reward ratio. Obviously, I would sell off a little bit right around here at the at $150, and I'd probably sell off some up here. And like I said, it has a really good price to earnings ratio. It's pretty cheap, but it's a fairly good stock, even though it's cheap. If I remember right, it's somewhere right around a 13 price to earnings. So it's a pretty good value, pretty good investment. But do know that this stock can get a little choppy. So make sure that your stop loss is big enough to accommodate for the volatility, or just make sure that you have a really safe entry with a lot of confirmation. All right, so I think you guys are going to like this one. This one is Amazon, and it's looking pretty good. Obviously, it's been lagging for a little while, so I mean, that's never really a good sign when you have a stock lagging. A lot of the other big tech stocks like Apple and Nvidia are at all-time highs, whereas this one still kind of back down here, pretty far away from this target. But honestly, as I said, with interest rates going down, with it being Amazon, it's a pretty good purchase. And this isn't the best mindset, honestly, but it's a pretty good value. I would say like this is looking like a good setup because we have this huge reward and this little tiny risk right here. This is a pretty good area to put that stop loss and a really good risk to reward. So even if we're wrong, it's still worth it. It's got a high probability. We've got good risk to reward. It's looking pretty good. And it's just such a beautiful setup here. I mean, it's so clean. There's like almost no resistance all the way up to this $180 level. So if we enter on the break of 150, which is what I'm looking for, and we use a very safe stop loss, which is like honestly down here at 140, that's only a $10 risk. And we're looking for a move up to 180. That right there, that's already 3 times how much we risked. And if we move up to 190, that's going to be a 4R winner. So this is a pretty good trade. Looking forward to it. The only problem is that Amazon moves around kind of slowly. It usually doesn't move as quickly as something like Tesla. So we are going to have to hold this potentially through a lot of volatility and for like a handful of months, most likely. It could take some time. All right, last but not least is United Healthcare. So this one's for all you investors out there who like something that is a good price to earnings, that's a good investment, that's usually a longer swing trade. We're talking like probably a few months or more, but it's a pretty good setup. We can see that quite a long time ago, We were hitting this high. It's maintained a lot of strength while being up here, and now we're back at this high. So all I know is that when it breaks out, we're going to have a decent likelihood that it's going to continue on and just continue making all-time highs and continuing the pattern that it's been on for decades of going up very quickly and aggressively. Not only that, but United Health is also a really good purchase for anyone who's on the safer side and is worried about a recession. And the only downside to this stock is that if you enter this, yet again, it does tend to be kind of volatile, where since it moves a little slower, you do have to worry about these false breakouts. So, what I would say is make sure to use a bigger stop loss on this one. That's why this is going to be a longer hold. You're going to have to hold out for a bigger reward because it might have a couple of false breakouts. It might kind of flop around back down here. So really watch out for that. But overall, if you're willing to wait a long while and to use a big enough stop loss, this stock could pay off pretty well. All right, well, that's all I got for now. So if you have any questions, let me know in the comments. Love to help you out. Look forward to that live trading that I'll be doing here soon. And if you guys have any ideas about any content you might want to see, just let me know and I can make some videos about it. All right, see you next time.